When I watched back on the July 20th council session where they were discussing the disposition of ELK, it's clear that the executives around the table did not place any value on retaining ELK as like the stewards of Essex County's power grid. And they didn't place any value on maintaining that independency and like having control over decision-making processes in regards to our electricity. It really seems to me like they're trying to run Essex Town Hall like a hedge fund.
This recommendation transforms what was once a relatively low performing investment into a permanent municipal financial asset. The expectation was that ownership would provide strategic value as well as a financial return for the municipality. Over the years, however, that investment did not perform as originally intended. During the town's ownership, ELK generated only about $666,000 over the entire 18 years. That represents an average annual return of 0.28%, which is less than what we would have received had we have just held the cash in our bank account. Recognizing that financial return and performance, council began asking important questions about whether we should continue the ownership of the utility and if that remained in the best interest long term.
This is one of the most important financial decisions this council is probably going to make. And
I also see that this is something we've been working towards, and this is a springboard. This isn't the only time we're going to be investing municipal money to make money. I see us doing this going forward.
Ultimately reducing the burden on the taxpayers.
And then I heard that, and that phrase stuck with me.
Ultimately reducing the burden on the taxpayers.
Because it's genuinely super frustrating to hear them try to spin this like it's a good thing for taxpayers. We just divested ourselves of our community power grid in order to free up $15 million of liquid cash that we're going to put into a legacy fund and purchase municipal bonds issued by whichever municipality across Canada CIBC deems investment worthy. Like, the whole thing is actually super risky. It's super risky if you consider like the market environment we're in right now, where the market volatility is wild. In any given day, the market can swing up or down 2%, 3%, based on whichever war or tariff or derivative bubble is bursting. Think about interest rates and how there is no real clear consensus on if they're going up or down. Nobody really knows. The liquidity risk and how is there a financial institution? Are there institutions that are flush with cash right now? Or is basically everybody broke? What about inflation? What about the fact that Canada's money printing is literally off the charts? We are 100% more than the United States. The chart that I showed just a couple videos ago detailed that. And like, that's weakening the Canadian dollar against all the other world currencies. We're printing way more money and giving it willy-nilly. What about specific risks to bonds and municipal bonds? How do those get paid? Well, think about it. For example, Vancouver issues municipal bonds at 4.5%. We invest our $15 million into that. The CIBC is going to take 0.5 and issue us a 4% return. Sweet. Okay. How does that coupon get paid? Well, the city of Vancouver is going to have to charge their residents their property taxes, and property taxes are going to be paid, and out of those revenues, they're going to pay the debts associated with the bonds. Are people having a hard time paying their property taxes right now? Like, because housing prices went up so high and now they're starting to come down, because interest rates are possibly going higher, because the cost of living on everything is up so much because of the inflation, and real wages have not kept up with all these pressures. Like, people are struggling. Are we going to have a market event where, you know, I don't know if there's going to be like delinquencies or people that are going bankrupt over this, but I think that the regular person is having a hard time justifying paying their property taxes. And if that happens, if enough people stop paying their property taxes in Vancouver, how are they going to pay the bond holders, the coupon and the initial? Like, this could happen so easily that these financial instruments CIBC wants to invest on our behalf end up losing money, end up losing value. But they've spun it as this super safe, diversified investment. It's all hocus pocus, okay? In an environment of inflationary environment, the best investment you can make is having a hard asset of like property, housing, land, electric utilities. Like, if you held that, you're holding on something that literally will not decrease in value. Like, if you think about the replacement costs of all the things that we just divested ourselves of, the telephone poles, the electric wires, the relays, switches, trucks, equipment, everything it takes to run an electric utility, it's like millions of dollars. We just gave that up for peanuts. We gave that up so that we can invest in some other municipality across Canada. Like, we gave up a utility that is mandated to generate a profit. It just doesn't make sense one bit. And to look at this transaction and completely negate everything in regards to being the stewards of Essex County power and being stewards of Lakeshore and Kingsville, and how they entrusted Essex to do good on the investment, hold it for the long term, and do better for the community and the households and the businesses that operate in these communities. They placed no value on these. They looked specifically at accounting numbers and looked at a multiple and said, yeah, let's give us a 1.6x multiple on whichever metric, and we'll sell it to Windsor at $20 million. And we'll take that money and put it here, here, and here. It is super risky. It's akin to gambling. And actually, it's actually a lot closer to a game show. And I think it's a game show that you are very familiar with.
Hey, it looks like the shell game to me. I'd like to have you come right over here at the end of this table, if you will, please. There's a ball under one of these shells. Let's move them around just a little. Then I'm going to give you a chance to try to win a chip. The idea is to put a chip beside the shell that has the ball under it. You do that and you're on your way to Hawaii.
Okay.
Now, John, what's the prize she can win a chip with?
Well, Bob, as could be seen by this report released by the Ontario Energy Board, it didn't take long for Enwin Utilities to propose a cost of service application shortly after acquiring ELK. The details of that are due at the end of this month, August 2026, to take effect May 1st, 2027. The applicant stated there is a pressing need to increase rates given the poor performance of ELK in recent years. They had significant net losses, more than $1 million each year, 2023 and 2024. Not good. Now, if we also move over to the Enwin page, you can see that Enwin and ELK have recently completed major infrastructure work in Lakeshore. They commissioned a second hydro feed, which is really good. And they are also investing in smart switching technology beginning in 2026. The thing is that with cost of service, all these infrastructure upgrades are going to be borne by the ratepayers. Which begs the question, what will that do to ratepayers in the towns of Essex Centre, Harrow, Kingsville, Cottam, Bell River, and Comber?
Janice, show us the wrong price. Is the right price higher or lower than $42?
Lower.
Lower, we want to know. Wrong, yes. John, what's next?
We turn now our attention to the ELK Legacy Fund. and how the town should receive an annual investment income estimated at $600,000 annually. Now the plan is to take 70% of this $600,000 and apply it to the town's asset management plan that has a current funding gap of approximately $29 million annually. In your estimation, what impact should that have on future property tax increases?
What does this price tag say? Is the right price higher or lower than $39?
Lower.
Lower. Show us. You're right. You won that sweeper and you get a chip. Now put that by one of the shells. All right, John, let's go on.
You got it, Bob. The estimated $600,000 from the ELK Legacy Fund returns is showing 70% to core AMP, 10% to new capital projects, and 20% reinvested to grow the fund. Now let's look. 600,000 times 20% equals $120,000 added to the fund each year. Now what we do is take this number and divide that by the total fund amount, 15 million, to get 0.008. You times that by 100, and we are adding 0.8% each year to the fund, which is something. But when you factor in that reported CPI numbers are at 3%, and the real rate of inflation is likely somewhere in double digits, what will that do to the real purchasing power of the investment fund?
Here we have a price of $50. Is the right price higher or lower?
I think it's higher.
You think it's higher, and it is lower. Oh, gee, I'm getting worried. I really am. You want to go to Hawaii, don't you?
Oh, yes.
Yes, of course. John, what's the last prize?
It's simple, really. Taking into account all aspects of the disposition of ELK Energy to NWIN, which includes the electrical rate increase, the property taxes increasing by a slower amount, and factoring in inflation, what is the net impact to the citizens' cost of living, and not just to people living in Essex, but ELK customers across Essex County?
And here it says $36. Is the right price higher or lower?
Higher.
Higher. Show us. You're right. There you got another chip. Okay, where are you going to put that? All right, I'm going to start here. If it's here, you lose because there's no chip by this shell.
Okay, it's not there.
No, it's not there. Good. Now, if it's here, you win. It's not there. You were right. It wasn't there. Now, it's really getting serious.
I can't handle it.
You can't handle it? Well, I'll do exactly as you tell me to do.
Okay, lift the last one.
If it's here, you do not win.
Right.
Wouldn't it be more fun to lift this one and see the ball?
Okay.
If you do it, all right, let's see. You do it! There's the ball. Have fun in Hawaii. Aloha. We'll try again after these words.